Hey everyone, Dr. Barry Burns with Top Dog Trading. Today we continue on with part 2 of stock market trading for beginners. So we're just focusing on how to read bars, how to read the price action here, a very basic thing that you need to know. So we're going to take it an extra step now, of course. So last time we talked about this type of bar here, where the market would open here, that's the open. Then the auction place, which is the market's an auction place, tested these levels. So price action went from there all the way to this high, to this price up here. Then before the day closed, because this is a daily chart, so each bar represents 1 day of price action, it came all the way back down and it closed at that little notch there. And somewhere in between there, it also tested that low. So that's what we've got. Open, high, low, close. Those are the 4 parts of a price bar. And what this represents, as we talked about last time, is a rejection of value of these prices up here because it opened and closed toward the bottom of the range. You can see that same type of action here, where the market, again, opened and closed toward the bottom of the range. What happened after that? The market went down. What happened after the market rejected these higher prices here? It went down. Why? Because it tested these higher prices. And then after that, it rejected them, saying, no, we don't feel the market is worth these high prices. And that's how we read that. Now, I'm going to show you one more thing here, a different kind of bar today. And this bar is exactly the opposite. So this is a very bullish bar. And again, a lot of this is just very logical. So we opened here. We actually opened at the low of the day. And then the market moved up from about $4 all the way to about $5, about $1 move that day. And it closed where? It closed very close to the high. So basically, the sentiment, the agreement of market makers this day was that, yes, this is a very bullish day. I call this a nothing but net day. This is a great day to just be long the whole day. And the other thing to understand about these types of bars, and this applies to these types of bars as well, is that the range of the bar is important. It's not just where it opens and closes in relation to the high and the low. Another aspect of it is the range of the bar. How far is the open, or I'm sorry, how far is the low from the close? It makes it more significant. So for example, we also have a bar that's of a similar pattern here, right? That pattern is pretty much very similar to that type of pattern, open and close near the low. But it's not as significant because of its narrow range from low to high. So it didn't explore as much territory. When you get into narrow range bars, they're just pretty much all neutral. When it's a narrow range day, where it opens, where it closes doesn't really matter that much. The market just really didn't move much that day, so it diminishes the ramifications of the high to the low. All right, so we said this is a bullish bar, and it is. And the next day, we do go up quite a bit, but it's just one more day, right? Then price comes down. So this is a little heads up for a future lesson to let you know that when you're reading the market bar by bar, if all you're looking at are these individual price bars, the individual price bar signals are short-term signals. They do not determine the long-term move of the market. Now, we will get into how to determine the longer-term move of the market, but we're starting with the simple building blocks, and these bars are the building blocks. Then, what we do is we interpret these individual building blocks in the larger context of the overall chart, and we'll get into how to do that. All right, we're also going to get into candlestick charting, which is a little different way of graphically representing these same bars. In fact, maybe we'll do that next time, now that you've learned a couple of basic premises about these open, high, low, close bars. All right, well, very good. That's it for today. I like to keep these lessons short and to the point. Go ahead and click the like button down below if you like the video and you think it'd be helpful for others. Also, any comments you'd like to place down below, I'd cherish your comments. Any suggestions you'd like to have for future videos, any feedback you have, I relish it. I love it. I love to make this a two-way conversation. And finally, up in the top of the video, you can see that box there. If you want to get my free video course, I have a free course that I give away to traders, and absolutely no monetary charge for that whatsoever. Just love to give you guys good education, and there's 5 videos in that course, and it is even more powerful than what I'm sharing with you here, because those videos are about 20 minutes long, so we have more time to go into more depth. Again, no charge for that. All right, everybody, thanks a lot, and happy trades.